Hey there, welcome back to Capital Markets Quickie. I'm your host, Endrit Cela, and today we're breaking down what's shaping up to be another volatile week in the markets. September has already been a bit wild, and it looks like the ride isn't over just yet. So let's dive into the key events you need to watch out for this week. First up, U.S. inflation data is coming out on September 11th, and this one's big. Why? Well, it could heavily influence what the Federal Reserve does at their next meeting on the 17th and 18th. Everyone's been guessing how much they'll cut rates, and right now, a 25 basis point cut seems like the front runner. But here's the thing, if this inflation report shows prices are still rising too fast, the Fed might rethink that. If inflation stays hot, it'll make it harder for the Fed to justify a bigger cut. But if we see a sharp drop in consumer prices, it could suggest the economy's slowing more than expected, and then we might see a bigger cut, maybe even 50 basis points. So, yeah, this report is crucial. Now let's head over to Europe. The European Central Bank is pretty much set to cut rates again this week. It'll be their second rate cut of this cycle, and everyone's already wondering what comes next. Are we looking at just one more cut this year, or could there be more? In mid-July, traders weren't even sure we'd see this many cuts, but now the markets are pricing in at least one more after September, and there's about a 50-50th chance of another before the year's out. The ECB's got a delicate balancing act here. Some policymakers want to go all in on more cuts to help the economy, while others are hesitant because inflation is still hovering a bit too close to their target. So, keep an ear out for any hints from ECB officials about what's coming next. Alright, let's switch gears to commodities. Investors are really trying to figure out whether the bond market or the stock market has the economy pegged right. Bonds are signaling a recession could be around the corner, but stocks have been hitting record highs, suggesting we're in for a soft landing. Here's where the gold-oil ratio comes into play. This ratio measures how many barrels of oil you need to buy 1 ounce of gold. When confidence in the economy grows, oil demand rises and the ratio drops. But when people are worried about growth, like we're seeing now, the ratio goes up. And guess what? It's at its highest level since 2020. Gold prices are soaring close to record highs, while oil is struggling to stay above $70 a barrel. So, someone's wrong here. Is the bond market right about a looming recession, or are stock investors onto something? We'll have to wait and see. Next, let's talk about the UK. The Bank of England was one of the first central banks to start hiking rates, and now it's expected to cut rates slower than most. But that could change if the jobs data coming out on September 10th throws a curveball. Last time around, UK wages grew at their slowest pace in nearly 2 years, but unemployment dropped more than expected. If this next report shows the job market is slowing, that could give the BOE more room to cut rates, and that could also weaken the British pound, which has been booming lately on expectations the BOE will keep rates relatively high. Speculators have been betting big on the pound, so if the jobs data disappoints, we might see some quick selling as those traders scramble to avoid margin calls. Finally, let's head over to Japan, where things are getting interesting politically. Prime Minister Fumio Kishida is stepping down after a scandal, and the race to replace him is heating up. Japan's next leader will have a lot on their plate: corporate governance reforms, the Bank of Japan's new tightening campaign, and the country's huge debt burden. There are a few contenders in the running, and the choice could have big implications for Japan's economy and markets. Shinjiro Koizumi, for example, is a fan of deregulation, while Shigeru Ishiba has been pushing for policy normalization. Then there's Sanae Takaichi, who leans more toward reflationist policies. The Bank of Japan is independent, but the government can definitely influence its moves. And with the BOJ's next meeting just a week before Japan's ruling party picks a new leader, the timing here is, well, tricky. So, that's your quick look at the week ahead. Between US inflation data, rate cuts in Europe, and political shifts in Japan, there's plenty to keep an eye on. As always, we'll be watching closely, and we'll catch you up on how it all plays out next time. I'm Endrit Cela. Thanks for tuning in to Capital Markets Quickie, and don't forget to join us tomorrow morning for a brand new episode.